Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. A lower, yet still another indecisive doji cross yesterday. That is, all 4 days so far this week have been indecisive doji crosses. Well, I'm not sure if it's a record, but this is surely not good for the bulls out there, seeing such indecision, intraday indecision as well on the top of the market. This was also the first pause, I suppose, after Friday's key reversal up and the week before last weekly key reversal up. I can put forward an idea as to why, despite higher markets, we're still seeing indecisive patterns this week. You see, these indecisive leanings are being caused by what we have further overhead. The 50% projected Fibonacci line just a little higher at 72.16. So far today, a different flavour already. A move down through the mid-May to date uptrend, currently at 71.28, but just at this time. Further below, we have the short moving average currently at 70.92, and congestion from early June between 70.66 and 70.81. German DAX futures. A bullish thrusting pattern yesterday as the market tried one last desperate attempt to stay within the recent rising wedge pattern, currently 15.769 to 15.808. It's only just on a closing basis. It failed. Now, I moved on Tuesday that this rising wedge pattern may be morphing into a possible narrow bull channel, currently 15.598 to 15.858. It's no longer too early to comment. It is time to say that it just about has done, as we'd run out of wiggle room on the rising wedge pattern. Just for your information, I've decided to keep on for the rest of this week target X1 in the 15.800 area, the achieved target for the recent small diamond continuation pattern. So far today, a really interesting move and a test of this new very narrow bull channel. Right from the start, we had a higher opening, then a drop down to the lower bull channel line, and then through the lower bull channel line, and looking right now like a combined bearish engulfing pattern and a bearish opening black Mariposa as well. Now, this lower channel line, I was looking to see if it was going to be made of sterner stuff. I'm not so sure now. We are now testing the October 2020 to date uptrend, currently at 15.479, and the gentle rising short medium moving average, currently 15.382, not far below that. And it could be that actually the rising wedge pattern has started to morph into a bearish move, becoming a bearish rising wedge pattern. And the bull channel has lasted only as long as the rising wedge pattern has done. So it'll be interesting to see where we close tonight. We are also on for a weekly key reversal down, but more on that probably on Monday, because it's only really happening right now. US E-mini S&P futures. Now, a really interesting pattern yesterday. It was an indecisive spinning top. It can also be seen as day 2 in a 2-day bullish meeting lines pattern. The market is now no longer hanging off the lower time, currently at 42.89, the original December 2020 to February 2021 bullish Andrews pitchfork, using as a clothesline on which to hang prices in action. This pitchfork will be retired over the weekend. The fall yesterday was limited not by the projected 100% Fibonacci line at 42.02, as it was during Wednesday's session, but by the approach to the rising short medium moving average, and that's currently at 41.89. And it was capped by the flatlining short moving average overhead, currently 42.32. Now, we still have one unanswered question, which I hope we may get an answer at tonight's close. The large range of this week and the lesser one of last week means that we are currently on for a weekly key reversal. If we close tonight either over 42.46 or under 42.28, then we'd be on. Interestingly, we are currently looking at a weekly key reversal down, right at the top of the market. This is a cause of concern, no doubt, for the bulls out there anyway. So far today, a slightly higher open, but then a fall, not as excessive as yesterday's, but actually initially not as excessive as yesterday, but it's actually pushing further down. And given the action of yesterday being an indecisive spinning at the top, it would not hard to make this a bearish engulfing pattern for today, which is what it looks like it may be. And that's if we close right now. And as I said, we're getting a test of that projected 50% Fibonacci line at 41.81 and a short moving average at 42.32. French CAC 40 futures. This market is becoming very, very sticky very, very quickly. And by sticky, I mean potentially dangerous. You see, yesterday we had a combined immediate countering key reversal up and bullish engulfing pattern. The latter was not that much of a surprise, as the previous session had been an indecisive doji cross. However, this is where the worrisome features started. Whilst 2 days ago we indeed had an indecisive doji cross, it was also a key reversal up. I remember mentioning at the time. Then yesterday, not only did we have a remedy for the indecisive doji cross with a bullish engulfing pattern, which is fine, the whole day was an immediate counter to the previous key reversal down with a key reversal up. I hope you can see my point. And of course, for my concerns, all this is happening under the overhead cap of the 100% projected Fibonacci line at 66.80, and in between the lower time, currently 65.70, and the middle time, currently 67.02, of the recent late February to late March broken bullish shift pitchfork. Now, in addition to all this worry, please just remember, all this action is set in the frame of the mid-May weekly key reversal up. Then there's today's action. Okay, here we go. So far today, another higher open and another attempt up to the 100% projected Fibonacci line overhead and the middle time that's just beyond. The move up has been halted so far by that 100% projected Fibonacci line, 100% projected Fibonacci line. However, that's not all. The subsequent fall has exceeded yesterday's range, such that we are currently sitting on another key reversal today as well. If we close tonight either over 66.67 or under 66.53, then we'd be on. Right now we are sitting on a combined counter to the counter, key reversal down and bearish engulfing pattern. Not the most comfortable things to see at the top of the market. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.